Welcome to the Common Sense Investing, or CSI show, with Victor McClure and Guy Allard from McClure Capital Wealth Management Companies. For the next hour, Victor and Guy will use their combined 60-plus years of experience to answer your financial questions with their own brand of plain-spoken language and hard-hitting style.
Welcome to the Common Sense Investing Show. I'm Victor McClure.
And I'm Guy Allard. Vic, I was getting ready for the office earlier this week, and you know how we've talked, we try to be consumer advocates as much as possible, and we talk about the silly commercials out there you hear, right? If you're investing in an IRA, stop doing that. That's no good, and they give you something better to do. And I heard one the other morning, and I said, I got to tell Victor. And you know what? Nope, I'm going to mention it on the show. And it said, it was a Bitcoin company. I don't remember the name. It doesn't matter. I don't know if it was exactly Bitcoin or somebody involved in the blockchain, that whole deal. But the line that got me, and I just started giggling and thinking about you guys, was, if you have $100,000 and you're an accredited investor. And I said, that's great to talk about on the show. The red flag there for me is not the $100,000. It's if you're an accredited investor. Now, folks, when they say that, they're not saying that because they want all accredited smart people in their program. Right? They're limited to no more than 35 non-accredited investors, and if you're accredited, you can be accredited one of two ways. Either through having enough money where they assume that you better know what you're doing, right? Or they don't care.
$1 million.
That's right. Or you have enough income.
That's right.
So it's really all about money. It's not about your intelligence. So the reason they only want intelligent investors is so that they'd have less recourse against them for selling you. It has nothing to do. So to me, the red flag is if you've got a project and you've got someone trying to sell you something and they only want accredited investors, there's not much of a fiduciary thing there, is there?
No. I mean, accredited investors are, you're worth $1 million. You make $200,000 a year if you're single, $300,000 a year for married filing jointly.
That's right.
The reason they go for that is you sell a private investment to somebody, they can legally screw your eyes out, basically, because you're assumed to be savvy.
He was accredited.
And what you'll find on most private investments are, not only are most of the people accredited, it's in the paperwork that you sign at the end of this 40 pages, somewhere in there you said that you're accredited. And they say, well, we don't know. We didn't check their background. And so they're off the hook. And it just goes to show you what private investments are. They are the riskiest investment there is, period. I don't care if it's New York real estate, life settlements, whatever it is. Anything that's private, there are no rules. The rules are thrown out, especially when they say we want accredited people. The rules are thrown out the deal. So, like apartment buildings, a lot of real estate doing it now.
Well, and I was going to say the worst part about most of those, and again, non-registered, accredited investors, those sorts of things, is there's no liquidity.
No.
What does that mean? That means there's no market. What does that mean? If you've got $100,000 in and you want, I don't care if it's only worth 70, just let me take my toys and I'll go somewhere else.
You can't get it.
There's no one to give you the 70 grand, even if that's or the 50 grand, whatever the value is.
Yeah, they are the riskiest investment on the planet, and very, 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 very few people should ever consider them. Yet, they are the most aggressive marketers. But I'll give you an example. There's 4 government agencies that monitor everything we do. And we're managing people's finances.
Yes, there is.
4 government agencies. If you've ever dealt with one of them, they stink. 4 of them, it's terrible.
That's crazy.
So they'll put you under the jail if you're a registered person.
But yet, apparently, if you're a politician, there's a whole lot of things you can do and have no issues. I digress.
But if you're doing a private investment, let's say it's a life settlement or a private, I'm buying apartment buildings, private REIT.
Yep.
There are no rules. Let's say I went to prison for 30 years for embezzlement and murder.
Well, as long as you disclose it.
The day I get out, I can be the #1 private investment salesman in the world. There are no rules. There's no background check. There's no nothing. And so you can just go there and say, and they'll say they're registered under a Reg D. They're registered in exemption from registration. They are not registered.
And what I meant was, in their prospectus, if they disclose under a formal life they were in jail, I thought they had to at least disclose the
only
background.
The principal, none of the salesmen.
You're absolutely right. Okay.
You're the owner, you have to,
you
got to get a clean owner.
Absolutely. And they find them, right?
Oh, yeah. And think about it. And what you'll find in these offices there's 30 people selling this stuff. They're all vice presidents. Why is that? because only an officer of the company can sell without a license. There's all kinds of tricks that they do.
Issuer agent, I think, is the fancy term.
So you'll have 30 vice presidents and 1 receptionist. That's the way they do it.
But kind of sounds like a bank.
Right. But it's so risky. Anything you do. I'll give you an example. Let's say you do real estate, a REIT. Let's say they are bundling this stuff together. Now, they're going to have a profit built in right away, right? They're not selling you the apartment complex for what they paid for it, right? So we know there's at least a big chunk there.
Conflict of interest.
Right. Now they're going to manage it. Of course, they're put it together. They're going to manage it.
Who are you going to hire to manage this?
You'll pay twice as much as they paid for the property. You'll own 40% of the actual property. The owners that didn't put anything in will own the other 60. And let's say they get a trouble year next year. It's getting hard to raise money. They can just double the management cost on the property. Sink the property. Remember, they've only got their money out of it because they sold it to the partnership for twice as much. I know this is confusing, folks. What we're talking about is private investments are one of the riskiest things you can ever do, period. Does that mean you should never do them? Probably not. But
we talk about never saying never, don't
right.
we?
Some could work out. It's just hard to with all that negative against it.
The scary thing, and there's nothing wrong with REITs, and there's good REITs, and real estate's certainly better than a lot of investments and a lot of choices, and we never say never, or try to never say never about any particular thing. But the trap that I've seen, probably Victor as well, with REITs and unregistered REITs, again, not the market, not having liquidity, but you'll know someone, perhaps, that's getting 7%. They say, hey, I'm getting 7% on this. I've gotten it for 3 years. The guy I talked to is wonderful. You should do this. And what is it? Well, it's a REIT. They usually get a nice interest rate, and it usually goes for quite a while. But again, when you try to get return of investment or get your money out, there's not a market in most cases, or it's very difficult.
I had one client call me from Seattle. I think it was Seattle or Portland. I can't remember. It's up there, the Northwest. Well, they said, you don't understand, Victor. I've been getting 8% for 14 years. This company's been in business 50 years. They own billions of dollars in property, blah, blah, blah. Moral of the story, went broke. But it doesn't matter how long they've been doing it. Doesn't matter. Public REIT, there's enough risk in real estate itself without having to worry about somebody stealing or overcharging or charging you double when they start. I have never, how long have we been doing this? 30-something years each.
30 years.
How many private investments worked out of that? What do you think percentage-wise?
Yeah.
1% maybe?
Yeah, it's a small number. Small number.
We were, there's other radio shows in Dallas were talking about the life settlements forever. They used to call them viaticals, but those went broke, so got to call them something else, and they're the exact same thing. We talked about, now it's the REITs, private real estate. A public trust, they have rules. People selling those have to have background checks. People selling those have to be licensed and trained not to screw people over and cheat them.
And even
as
you're listening to us warn you against these and trying to be careful, I know some of you out there thinking, well, wait a second. Victor just said this guy got 8% on his money for 14 years. Mm-hmm. But do the math on that. That's 112%. You get 8% times 10 years would be 80% of your money plus 32. Simple math. You've made 132. So what have you made? Or 112. Yeah. You've made 12% over 10 years. That's not even 0.5% a year.
And that was his life savings.
Yeah.
So what happened at 12 years? He's broke.
That's right.
Because he was using the income, right?
That's right.
And so that was the best story I could find. That's the best one I know.
You're trying to be kind?
Long. Yes. Most people just lose. So stay away. Like I said, the stock market is risky enough. Everything in this world is risky enough without worrying about somebody cheating or stealing from you. And so, as many times I can tell you, and also if you have sometimes you'll find an actual licensed person that also sells private investments. That happens a lot. Well, they'll be you got to stay away. That licensed person will not be licensed long.
Yeah, I was going to say.
I can give you a list of those that have been on the radio in Dallas that no longer have a license because they were selling. Now, if it's so good, why would they lose their license? Because they're never that good. There's always something ridiculous. When there's a room for a crook to get in there, they're going to get in there. And so private investments for 99.9% of people are just not good. They're calling them all kinds of different things. When they start saying, don't invest in your 401k, don't beat the pants off IRAs, all that kind of stuff, that's a sign that no legitimate financial advisor would tell you not to invest in your 401k. I'm saying none. That's zero.
And it's not because these are secret things that we only participate in. We run from these.
No, the stories are fantastic.
Always.
The best salesmen sometimes aren't the most, they could be a great salesman, tell you all this story. Oh, my gosh, that's the best real estate in the world. Doesn't matter. Stay away from all private investments. If you ever listen to anything, we've been on this radio for 20-something years here in Dallas. If you ever listen to anything, you can do the stock market, you can do annuities, you can do life insurance, you can do almost anything you want. Gold's fine, all of it. Just stay away from private investments. We got a break coming up, folks. Stay with us. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, where your investment strategy is always based on facts instead of some sales pitch. Here's Victor McClure and Guy Allard.
Welcome back to the show. Well, that first segment looked like we went right into it.
We got kind of chastised by the engineer. Said, hey, your listeners don't like it unless you visit a little bit first. Dang.
I think we ran into the pitfalls of private investments.
Yes, we did. Did we cover it good enough?
I think we covered it good enough.
All right, good.
One of the, we're here. If you guys haven't heard us lately, we're at the Star with the Dallas Cowboys headquarters because we're Patriots. It's America's team. Football season has started.
We do stand during the show.
That's right. Every time I hear America the Beautiful or Dallas Cowboys, I get a tear in my eye.
He does. That's true.
I told you my neighborhood would prosper. There's only like 2 Cowboy fans because there's nobody in Prosper from Texas.
They're all transplants.
Yeah, all transplants.
Yeah.
I've got Pittsburgh Steelers fans, Green Bay Packers. I'm like, am I still in America? This is not right.
That's right.
But doesn't work. So apparently, if you move from Green Bay to here, you're still a Green Bay Packer fan. I don't know how, why, but
I think it's the city you're born in, and even if you're only there for 6 months, it doesn't matter. You're just kind of, that's your thing.
My 6 years in the military, being away from Dallas, I was still a Dallas Cowboys.
Yeah, but you were born in Dallas.
That's right. This is the, if I was in Europe here, a month or so ago.
Yeah.
I like traveling a little, but I'll tell you what, every time you get home, Texas is the greatest place in the world. There's no place to raise a family better than Texas. And so, happy to be here, happy to be in Frisco.
The
with
Republic
the
of
Cowboys.
Texas.
One of my, I was in my office here last week, and the receptionist called me and said, you need to come up front. And I said, why do I need to come up front? I'm on the phone now. She goes, the Dallas Cowboy cheerleaders are here to see you. And I'm like, well, hold on, let me brush my teeth.
I'll be right there. That's right.
So they were giving me a jersey that says McClure Capital on the back from Jerry Jones. That's why he didn't bring it up personally, but okay, we'll take the cheerleaders.
Yeah, the Johnny Walker Blue just ready just in case.
That's right. I got it ready right here.
That's right.
His bar closes at 12. My office doesn't close. And come on over. It's not been touched, so he's got a brand new bottle for him. But no, we're excited. Like I said, we've been on the radio for a long time. We were off for about 6 months or so. First time in 20-something years. That won't happen again.
No, and thanks for calling. We got a lot of calls positive calls.
Absolutely.
Saying that they were glad we were back. So
apparently,
I guess
like 3 shows have replaced us and didn't make it. So
yeah, what's
we've
going on?
We've had the same
with
spot for a long time. So yeah. I'm glad it opened back up.
Hey, speaking of that, unless you wanted to keep going, we had a couple a good question from one of our listeners, but more importantly, and I'll let you get into it, Victor, because you talked with the fella, but we got a call from a fella that was retired, I think, from Merrill Lynch or a large wirehouse, and is in a retirement center. And as we all know, people in retirement center aren't all in their 80s and 90s. I mean, they range from late 50s on through, depending on what type of assistance you might need and what your preferences are. And I guess a lot of financial advisors and or quote financial advisors, insurance guys, strategists make their way through that assisted living area and are talking a lot of, for lack of a better term, hoo-ah. Mm-hmm. And he called and talked to Victor and said he really enjoyed the show, and he'd like to get some folks in there that could really give them a good financial foundation, give them some help, give them some good guidance, and not just get in there and try to sell them something.
Right. Like I said, he's heard our show, knows the credentials we have, and we basically, he said, you know how many people they're not crooks, but they're just not the best advisors. I said, well, that's normally what happens. They're not chasing the the assisted living centers, unfortunately. You're going to have these newer people trying to get business, or they're learning on your money. It's hard to get experienced people to these places. And so we told them we could do it. But like I said, he goes, you'll find people just trying to sell 80-year-olds life insurance. I'm like, why would 80-year-olds need life insurance?
Yeah.
How experienced? And he goes, or it's some so basic, that it's ridiculous. And they just don't know what they're doing at these places. I go, I didn't even realize that people went to those things, but apparently they do. But if you have anything like that, like I said,
call us.
We can't always do it just because of time constraints and things. We're one of the biggest producers in the United States, so sometimes but we'll do our very best to come talk to a group if you'd like.
Sometimes you may have a business lunch with a business group, and if that same fellow is listening, we're working on putting together some slides so it's not just a lecture when we come out there. Right. So that'll be put together shortly. And
we're going to start. That's one thing I've always hated, seminars. Right. We did it for many years. It's just so many people do seminars.
Yeah.
But I get it. People, it's a safety in numbers kind of thing. They're more comfortable doing that than thing. And we can have our seminars at the Star. So you can be watching the field while they practice, and you do it. So everything we do is going to be here at the Star. And if you haven't been here yet, it's pretty amazing. There's a hotel, there's a stadium, there's office buildings, there's 2 dozen restaurants, a nightclub.
Shops.
It's really, really nice now. There are two places I think are the best new developments in Dallas are the Star and also Legacy West Shopping Center.
West side of the tollway.
It is amazing over there. Outdoor music venues, kind of like Austin, but it's really nice. And so when you come to a seminar here or you come to our office, you can spend a few hours. You can go to dinner. There's some real nice stuff over here. And so it's kind of like a destination. The next office I'll probably open might be in Fort Worth, and I was thinking about making it the Stockyards to have a destination at each place.
That'd be nice.
You're always trying to think of things because, sometimes seeing your financial advisor is almost as bad as seeing a dentist. People don't like looking at, uncovering, okay, do I got issues here? So we'll try to make it as enjoyable as possible. I can tell you that Guy and I have been doing this over 30 years each. Not one of us has ever had a single customer complaint. Now, you do stocks and bonds that go up and down for a lot of years. That's really good.
Very difficult.
So, remember, call us if you have any questions, if you'd like to take advantage of our no-cost, no-obligation retirement analyzer, Social Security optimizer. Our number is 972-715-2424. Again, 972-715-2424. You can always go to our website, ilovemyretirement.com. We got a break coming up. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
Welcome back to the show. I'm going to make one thing on this show. Remember, if you haven't got a copy of my family love letter that we developed, I want to make sure everybody gets a copy. Remember, I can give you story upon story about people that didn't fail to plan for something happened to them, but their loved ones didn't know stuff existed, didn't know there was a burial policy. I buried my grandmother, found out there's a burial policy that she had already prepaid. Apparently they don't tell you.
Yeah.
At the same funeral home.
Oh, is it at the same
place? Oh, yeah.
No. Oh, I hope he doesn't find out, right?
Oh, I remember the story of my brother that died of Lou Gehrig's disease. His wife that took over the expenses didn't realize he was paying life insurance premiums to get his kids out of college, and he was incapacitated. And so the moral of the story is he didn't fail to plan for his children's education. That his wife just didn't know it existed.
Yeah.
And so by not knowing these things, remember, a will or trust tells who gets what asset. It doesn't tell where that asset is. Where's the safe deposit box? Where's the key to that? What is the number? You can't just call a bank and say, my brother has a safe deposit box there. Can you let me into it? No.
No, it don't work.
You got to know the branch, everything else. What's the combination to your safe? How about your passwords for your computer? What about if you have, like some credit cards, if you get in an accident, they might have $1 million accident policy because you use that credit card. Somebody needs to know these kind of things. A will and trust just divides assets. It doesn't tell you where they are or they're physically located or what actually exists out there. Because some things, what you'll do is you'll put a will in, and then you'll forget that you've added stuff since that will. So how's that going to go? So it's different than a probate or anything else. Also, let's say someone owes you money, and you say, well, I want it to go to my oldest son if I pass away. I want to forgive it if I pass away. That is entirely up to you. But I can tell you story after story. One of the heads of Dillon Gates died, and it was a rare blood disease.
It took years, right?
It took years to find everything. Yeah. They didn't expect to die, And so all of those kind of things. Oh, you hear stories about draining people's things. They didn't know the person had a long-term care policy. There's so many stories like that. My Family Love Letter, we developed that to help your loved ones in time of incapacitation or death, because sometimes you just don't expect to die and you haven't had time to get all these things together.
Most of the time, you don't know when it's going to happen.
It won't take an hour to fill out probably, but it could save your relatives and your loved ones months and months.
Now, whatever you do, don't call and have us send you one and then put it in the drawer.
Right.
Because it's like anything else. When you get these forms, you take one look at it and you go, oh, now I got to look everything up and list it all.
That's right.
And is that going to be secure if I do it? Where do I put all this information if I do it? If you get it, please use it.
Our number to order that is 972-715-2424. Again, 972-715-2525. What did I say? 715-2424.
You got it.
My mind just went on blank. I've had the same number forever.
I think you're already in Vegas.
So we've got that. ILoveMyRetirement.com is our website. Let's talk a little bit about the question you got about gold this week, wasn't it?
Do we have enough time?
We got enough time to start it, yeah.
All right. We got a good question. I didn't bring the question in verbatim, but they asked us, Victor, to discuss gold, and you can see why. There's many commercials now that are telling you that gold is where you need to be. It's IRA qualified, I think, is the term that they use.
Why would you have paper assets when you can have hard assets?
That's right. And they also have special minted coins that you can buy, and you've got these silver dollars that were off some ship that I remember that from World War
some Spanish galleon.
That sank off the East Coast. So you want to talk about it before I go through some numbers?
People don't realize that gold is not an inflation hedge any longer. It used to be. There's a couple of things people would use gold for. Inflation hedge.
Yep.
Inflation's going up, so your gold's going up. So even though your prices of things are going up, your basic goods are going up, so is the gold, so it offsets it. It's a hedge against the dollar deflating, right? The dollar's going down. It doesn't do any of those, and it hasn't done any of those for a long time. The dollar's been, when the dollar goes down, it doesn't mean gold goes up, or the dollar going up doesn't mean gold goes down. We got off the gold standard, I think it was, October, August of 71, something like that?
Nixon, I believe, was the president when that happened.
But it just doesn't do it anymore. If it did it, do you know how much gold would be right now if it actually went up with inflation in the last 30 years? It would be, $40,000 an ounce or something.
No, it'd be crazy.
It's crazy the amount that it would be. After the break, we'll talk about exact numbers. But does that mean you shouldn't own gold? No, there's nothing wrong with having gold. It's a diversification tool.
Sure.
It's beautiful. There's all kinds of reasons you can have gold, but making money and comparing that against stocks or bonds or CDs or annuities is not a fair comparison. We'll talk about it more in the break. Don't hesitate to call us if you have any financial questions, 972-715-2424. Remember our website, ILoveMyRetirement.com. There's some great white papers on there, articles, videos. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, the home of plain-spoken, no-nonsense answers to your financial questions.
Welcome back to the show. We were talking about gold right before gold, silver, whatever. Now it's a lot of silver commercials I hear too.
And I was going to mention in there briefly, I get it. I think a lot of the thing with gold is its sex appeal. They talk about getting gold fever when you see it.
Pirates love gold. I mean, everybody wanted gold.
Right? That's right. Pieces of 8, right? Remember, they use that as currency. And if you remember back in the 80s, oil and gas was sort of a sexy thing, and a lot of money was going in that direction because you had the Dallas TV show, and you saw the Ewings and all their wealth, and you had a depletion allowance, and you had the tax write-off on your investments, so it didn't cost much. So a lot of people, again, those were private investments, poured a lot of money into it. And you have to have things line up perfectly, almost like a roulette wheel for you really to win on those. And in that sort of case, maybe you could get a 40 to 1, depending on how you bet. But on gold, the numbers aren't there. And right now, there's a lot of TV shows with Gold Dust or whatever the show is in Alaska with the guys. Think about it, even at $1,200 an ounce, give or take, where it is now, all the diesel money they pay for the fuel for that, all those equipments and all those machineries they have, and taking that dirt and washing it and the labor and
it's gold rush.
Yeah, you see they got a couple $1 million made gross for their year, for their summer before the permafrost hits. But if it had $2 million, it might have cost them $1.5 million to get it. Now I understand $500,000's a lot and it's sexy, but that's not what you're looking at or I'm looking at if we go and
like
buy
I said,
it.
there's nothing wrong with buying gold.
That's
it's
right.
just not a great investment return-wise. Think about it. It was $1,000. What was it, 1980, 81? It hit 1,000 shortly, briefly, right? That's when the Hunts were trying to corner the silver market.
Oh, yeah. Before they got in trouble.
Think about it. If it's 1,000 then 1,200 now, what kind of return is that over 35 years? It's nothing.
I'm glad you asked. Let me share some numbers with you, and keep in mind your lifespan. If you had 100 years to defer it, and this isn't selectively picking the low year to the high year, which you could certainly do, and make a case for gold being a good investment, but that's not realistic with what you want to do. So if you bought it, and the calculator would only go back 100 years, so 1915 through 2015 was the best return that Victor and I could come up with. If you were able to hold it for 100 years.
It was $20 an ounce at first or something?
1,200? It was $20.67.
All right.
And at the end of 15, which is as far as these charts went, it was 1,060. I understand it's more today. But that rate of return was 5.2%.
If you bought it at 20.
If you bought it at 20.
All right.
Now, if you went from 1980 through 2015, right? That's a little bit more of a normal lifespan, 35 years. You know, if you bought it in not lifespan, but investment deal, because you're not investing at 14 usually.
Right.
The rate of return is 1.75%.
And that's at the close of 2080. That's not the high. It's like $500 it started with.
It was at
Not the
594, and it hit 1,000, did it not, in 80?
So you got less than a 2% return, which, by the way, you know how bad CDs are? How everybody hates them?
Right.
CDs would have killed it. So what we're saying is it's not a great return vehicle. Does that mean it can't be $3,000 tomorrow? No, it can be.
That's
Who
right.
the hell knows? I just know historically it's never been a great investment vehicle. If you take that same $20 and put it in the stock market 100 years ago, it's like $100,000. It's crazy numbers.
And don't let someone tell you, well, it's you buy it low and you sell it high. Well, I mean, we know that philosophy, right? But that's meant to do over a longer period of term. I don't care if it's gold. I don't care if it's the S&P 500 as an index. I don't care if it's Google. If you're going to day trade, which is what they might suggest by you getting in and out at the right times on gold, Victor and I have known many a sharp persons that have tried to day trade. Professionals, that's all they did, and they end up broke. It's very few that do that successfully.
What you'll find is somebody's trying to cherry
pick.
Well, they'll say, I bought this at $212, and I've sold it at $12.95.
That's right.
I'm like, really? I'd like to see the proof of that one, but it does happen.
Sure.
But even that great result, other stuff killed it too. Real estate would have beat it. Think about what real estate was. We sold our house at Preston Hollow in 1978 or something, or 74, I think, for $36,000.
That's right.
Now this is a half acre an acre in Preston Hollow. Now those lots are $500,000 to $1 million now. Was gold better than that? No. Stock market was way better than that too. It's crazy numbers. If you make 4 or 5%, it's nuts. So the best number we could come up with is 100 years at 5. Mostly it's under 2%, 1 or 2%.
And I'll give you an idea from 1967 back to 1952, gold was $35 an ounce. From 1912 all the way back until 1868, it was about $20 an ounce. I mean, those are long periods of no movement at all. But it's solid. You shouldn't lose your money unless you buy it at a high. Well, it's $1,200 right now. It's pretty high. It's not 18,
so
but it's 12.
You know, I buy my wife jewelry. You know, I like gold.
It's an investment.
I've got some gold. That's not
Gold and diamonds.
It's just not really an
Hasn't
investment.
she
To me,
shared
it's
with
more
you?
like an heirloom thing.
Hasn't she shared with you jewelry is an investment?
Oh, yeah. That's what I'll say.
That's I hear it all the time.
Yeah, I know. I don't believe that one either. There's another one that's probably not good. Remember, we're just giving you investment advice. This is some investment in gold is cultural. People, it's culture in a lot of, it's usually countries that have a fluctuating currency. So gold is a more stable type of asset than their own currency. Indians do that a lot, and there's nothing wrong with having gold as a cultural thing or whatever, or having a hedge against a very volatile inflation. Just against the dollar and the things we have here in America, it's probably not the best investment-wise. But that has nothing to do with should you buy it or not.
Almost everybody
Just don't expect to make a bunch of money on it.
Almost everybody has some.
Right. So, we got a break coming up, folks. Remember, we offer a no-cost, no-obligation, the most comprehensive retirement plan I know. There is no cost and no obligation, and it'll show you whether you're on track for retirement or if there could be potential issues. And if we can find them earlier, it's more the better. Call us at 972-715-2424. We got a break coming up. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
Welcome to the Common Sense Investing Show. I am Victor McClure and your Guy Allard.
I am Guy Allard.
Hey, Trump asked the Treasury Department, it's not an executive order, to ask the Treasury Department this week to look into if we can
lengthen the
remove
RMDs
or take out RMDs.
I saw that.
Required minimum distributions. For those of you that don't know, once you turn 70 and a half, the government will make you spend down your retirement accounts. The only exception to that is if you're still working and you have a 401k or something, you don't have to take out of that one. Now, if you have other IRAs, you'll still have to take out.
Yeah.
And so they're talking about something like that, maybe if you're still working, to still not have to take out of the IRAs. The only problem is that is a huge cash cow for the government. That's only because you keep stretching it out. Remember, nobody's ever paid tax on a 401k, and so they're already 70, and they're still not going to pay tax on it. So I don't think they can get it through. But that's what they're trying to do right now.
Yeah, I couldn't. And then if your heirs stretch it, it comes out at a lower rate. I mean, it really would prolong the government getting the taxes.
Right. And see, what happens is people are still working. They still got their big check. So when they take out, you still get a paycheck. So let's say you're making $200,000, $100,000, whatever. When you have to take, because I will work past 70. You take out of an IRA, well, all it is your tax bracket. Well, you're in a huge tax bracket. If you could have waited till you retired, when you only have Social Security coming in or whatever, in other words, you can get some of that money out tax-free in a lot of cases if you don't have a lot of income coming in when you're retired. But when they make you take it out, if you're still working, you're going to pay the maximum tax on it. Up to 37% of that distribution's got to be taxed. Now, let's say you decide not to take out the required minimum distribution. It's a 50% penalty from the IRS. 50, not 15, 50.
That's right.
So you will take it out. And so I like the merits of it because it's true. Once you're working past 70, taking money out of IRAs, you're paying maximum tax. And that's another reason why I tell people, don't automatically jump into the Roth IRA bandwagon. Because Roth IRAs, you're going to pay tax while you're working, right? It's going to come out tax-free later. But I get so many people that pay little or no tax on IRA distributions if they plan it correctly.
People are hard-headed. And one of the other big selling points for it, I'm not forced to take it out at 70 and a half. When it's a Roth, they don't care if you take it out. You've just paid all your taxes.
You've already paid all the taxes.
So you got to really weigh out your tax bracket in retirement versus your pre-retirement tax bracket and how important not taking it out at 70 and a half is.
The Roth IRA was not a gift from the government.
No.
The Roth IRA
to the government.
is a gift to the government.
Pretty much.
Remember, how long does it take when they take 3 or 4% out of a 401k to them to get tax money? It takes forever. Plus, remember, they don't have other income streams in, so it's a lower tax rate. Well, if they did a Roth where people just pay the tax up front, they're getting their high tax rate. So there's only one reason a Roth will mathematically beat a regular. You're in the highest tax bracket now, and you will always be in the highest tax bracket. In that case, you are protecting yourself against future tax increases, And you know it is a good idea. So for the ultra wealthy, that they have too much money to invest in a Roth in the first place, but they can convert. You can convert.
Yeah.
There's okay. Roth is good. For the vast majority of people, I've had people go, no, I converted this to a Roth 2 years before retirement. I'm like, oh, no. They're like, no, you don't understand. Tax-free is better than taxable. I go, not if your after tax is twice as much money. He goes, what do you mean? I go, what do you have coming in retirement? I got Social Security. What's you and your wife's Social Security together? I don't know, $40,000. I said, okay, $40,000. What's the standard deduction for a couple? It's $24,000. Okay. So you got $26,000 income. What do you think the government's going to tax somebody with $26,000 income? The answer is zero in federal taxes. So let's say you got to take out $20,000 out of your IRA. What's the most you're going to pay on that?
Yeah,
10 maybe, if anything.
Maybe. So
you got to be making $60,000, $70,000, $80,000 a year to pay anything on it. And so you could have grown it tax deferred, tax deductible for 50 years and get it out tax free just by planning things right, or just by not having a paycheck coming in. But with a Roth, you pay the high tax bracket every time, and so it doesn't matter.
It's the same thing with tax-free bonds. People love the term tax-free in front of any investment. And it's the same thing with tax-free bonds, if I can say that to be redundant. If you're in a high tax bracket, you can take advantage of not having to pay taxes. You save 30-some%, right? Or you get an additional 30-some% because they're reducing their yield because it's tax-free. But if you're in a small bracket, it doesn't help you as much, and the reduction you get in rate it's not made up with your tax bracket being small.
That's right. You really have to, like I said, you can't take because tax-free sounds way better to me too.
Oh, it's sexy.
That's right. Tax-free is way better because taxes stink.
Absolutely. That's what I want. I want that.
A normal retirement, regular 401ks, regular IRAs are way better, period. I can prove it to you mathematically anytime you want. It is virtually impossible. Because remember, if you're in the same tax bracket and working in the same tax bracket retirement, they're actually the same. The number's identical to the penny.
Identical.
But if you're in a lower tax bracket in retirement than you were working, you're better off in a regular IRA, regular 401k. I could show it to you 1,000 times. Remember, I was a nuclear chemist. It's just math. Yep. Everything else is a sales pitch and BS. It's math. So don't convert everything to a Roth. Very wealthy people, that's your choice. Nothing wrong with converting to a Roth if you're wealthy, because it will save you against future tax increases. For the 99.9% of the rest of us, do not do it.
That's right.
Well, that's our show, folks. Remember, don't hesitate to call us if you have any financial questions. You'd like to take advantage of our no-cost, no-obligation retirement plan, written retirement plan, and Social Security Optimizer. You can also get a copy of our My Family Love Letter to help your relatives if anything happens to you. Our number is 972-715-2424.
The preceding show is paid for by McClure Capital and is for informational purposes only and not a solicitation or representation of any particular investment product or service. Any views and opinions do not constitute financial, legal, or tax advice. Consult with your appropriate professionals before making any investment or savings decisions. Always consider your risk tolerance, time horizon, and objectives in making any financial decisions. There is never any guarantee of future success or performance.